Okay, question 5 and question 6. So here we have a this is a bicycle factory uses absorption costing, and remember that this is all in this is management accounting. This is the world of management accounting. The management accountant has to have a figure in his budget. That's what budgeting is all about, and he will put journals through from time to time to adjust. And ultimately, he's using this absorption costing, which is a budgeted figure, projected figure, for anything, whatever, material, labor. But here we're talking about overhead. So he says, listen, last year we did. I'm just making this up. He says last year we did 100,000 hours. We spent 100,000 pounds. So I'm going to assume that we're in 100,000 pounds in overheads. I'm going to assume where we spend roughly about £1 an hour of direct labor hours. So we had 100,000 direct labor hours, right? That's how he must have arrived at £100 an hour. Because if he spent 100,000, he must have divided that by 100,000 hours. So he says, I'm going to make the assumption that this is the same, and this is what he goes into this new year with. So he's recording for every hour that comes up from the labor budget, the labor team, if you like, as that's coming through. Remember, we're dealing with overheads here, not direct labor, but because the overheads depend on the labor, he's recording £1. So overall, he currently has £130 as an expense for overhead that he has recorded in his expenses when preparing his profits. And then he finds out that, oh well, actually, by the way, so it doesn't matter. Call this. Remember, this is a budget, so he's accruing for this. So somewhat, he's sort of gone debit expenses, 130,000, credit accrual. Let's just say he hasn't paid yet. Right, that's the financial recording, the financial entry, credit accrual of expense. So this is a liability, current liability, isn't it? So the bill actually arrives, so it's time to pay, and he actually finds out that actually the bill is actually 110,000. So what he's going to do is, I mean, currently this is expense, it's hitting his profits. His profits are currently understated. Oh, his profits are suffering 130. He says, oh, actually it's 130. So, oh, no, this is right. You shouldn't do this. So what he will do is he'll put another journal through. So he'll put a journal through his whatever general journal, and he will say, okay, listen, credit expenses. So credit expense 20,000 and debit the accrual, bringing this back down to 110,000, and then he'll pay it. So debit the accrual and credit bank. That's how he would financially deal with this thing. So it means that over the period, what he's done is that. So the question is, what's actually happened right now? So well, what's happened is that over time, he's put in 20,000 too much. So if you like, he's 20,000 over absorbed. The body, the financial statements have taken in 20,000 over what they should have, and that's how we arrive at A. Right? Cool, great. Question 6. So what I'm going to do with question 6 is kind of pull it out a little so you can see what's going on here. I talked about the evolution of budgeting, sorry, of overhead, dealing with overheads. So really, we used to argue that big volumes were driven because you see, really, it's to do with the units. You see, because volumes equate to units. And this was the traditional case. I remember taking you through this whole process here. That generally, when you have 90,000 items here and 10,000 items here, if there's a lot of labor, if this has been labor intensive, right, and machine intensive, and we're making pretty much very similar items, then again, the labor is uniform over the items, so it is very likely that that overhead can be spread literally over the. If I was spreading this overhead of 100,000, these are units now, by the way. These are units. Let me make it 200,000 so it's not to confuse you. Units here. If I was spreading this overhead of 200,000 over these units, well, I would spread them right almost based on the units because the hours. I mean, I could argue therefore that this is taken. I'm just going to make this up: 90,000 hours and 10,000 hours because it's very similar units, very much volume driven. Split that up, if you like, based on the hours involved, and therefore based on the units. So if I was doing this based on the hours, I would say, well, there's a total of 100,000 hours, and therefore it's £2 an hour, which is 200,000 over 100,000. If I'm looking at the overhead absorption rate, right, those are my hours, and then basically base that £2 times one times 90, which would give me 180,000 here and 20,000 here, and I just split that. if you like, pretty much. But what activity-based costing comes along and says is that, well, actually, there's a slight issue here, that activity-based costing evolves this idea. It sort of says, listen, what if we now have, as we do have, it's not that we chose this, we now have scenarios where in a tech-based environment, we're no longer dealing with, there's not as much as you and I know. I mean, there's enough articles out there talking about how robots are taking over and blah, 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 as you want. The key point is there's not just, even on manufacturing floors, you see a lot of machines, actually robots doing a lot of the work, but you still need some labor. So it's no longer driven so much by labor. It's driven by other acts of overhead activity to ensure that the robots are doing the work carefully or properly. And very much due to quality inspection. That's a good one I like to use. And so, in fact, I'm going to look at it like this. So, imagine you're not making items that are to do with volume, if you like, right? So, once we're dealing with items that aren't to do with volume, then we cannot continue to use just the traditional absorption costing, because imagine I'm making literally one drug, one vaccine, one tablet here, because this is going to be the sub cell of all the other tablets. And I'm going to spend so much money making it. I cannot, and I'm making Panadol here. I'm making thousands of Panadol items. I'm going to end up, if I'm spending a lot of time looking and investigating and testing and quality inspecting this one item, it's going to take more of the overheads. So I cannot say, based on the physical units or the labor typical involved here, I'm going to use activity-based cost and traditional absorption costing anymore. No, I have to look for something that's look at the drivers of this. And so definitely here, quality inspections, setup costs will be more for this little thing here than these ones. This is Panadol. I could do one setup, one inspection, and I could do 1,000. I could look at I could look at 1,000,000 units at once and be happy. So it's no longer volume based. So let's now look through this question. So which of the following is not considered to be one where activity-based costing would be of benefit? So let's start from the bottom, right? So here we are. So complex products. So when we're dealing with complex products like this, very profitable and simple products appear to be losing money. Because I want to be very clear on what the costs are, once you have complex products involved, I want to make sure I get it right. So here I want to make sure I am using activity-based costing because I'm dealing with products that aren't uniform, that are very different. So I want to focus very clearly on what's causing the cost. So definitely here, I want to be using ABC. So it's not, this question says not. So I'm looking, so this, it's not this one. I mean, here I need ABC. I need ABC here. This question is not, so I need ABC here. Products have differences in volume, in processes, in batch complexity, significant different levels of support. Well, I mean, this is what quality inspections, batches, setup costs, and difference in volume. So different volumes, different things. So you really want to break down those costs clearly and see what's going on here. So here I need ABC. Makes sense, right? A significant proportion of the organization's costs are indirect costs. So there is a lot of indirect costs, and this we have to be so cautious about how we split those indirect costs. So yes, I do want to split those costs carefully into the different areas, right? Because there's a lot of them. So generally, when you have a lot of those indirect costs, you do want to spend some time if you can afford it, and not assume that it's just based on volume, right? Just because you have a significant cost of indirect cost doesn't mean it's based on volume. It's just indirect. Quality inspection is an indirect cost. Setup costs are indirect costs. So we want to really investigate. So ABC is good here. Let's look at this one. There is a small product range, so not a lot of products, a relatively low volume of a relatively low proportion of non-volume, right? So, like what I said, when we have volume-based material, so here I have non-volume, so yeah, okay. I'm thinking, well, so great. I have a low proportion, so that's fine. It's low. I can, I can sort of say, I have, it's not high. I can take a risk. There's not a lot of these sort of things that I could break down, but there's just a low amount. I can have, it doesn't matter. And it says I have a lot predominate. This is the key: direct labor and direct materials. So again, back to my world of traditional absorption costing. A lot of labor, a lot of material. So right, okay, fine. I hear it's okay. I can use normal traditional activity, normal traditional absorption costing. I don't need to start using ABC. I just don't. It's there's no need for it. So the key point here is that where things are, where there's a lot of overhead that has nothing to do with volume, then I need ABC. Where it's more to do with materials and labor, where it's volume driven, then I need, then it's okay to use traditional absorption costing. Cool, great stuff. So the answer here is A.